Welcome to Smart Tech and Finance US. Today, we will master the Parabolic SAR indicator for your ultimate daily trading market. This incredible technical analysis tool helps traders identify potential trend reversals and provides precise exit. Developed by the famous J. Wells Wilder, this indicator appears as a series of distinct dots placed directly on your price chart. These tiny dots magically trail the price action, acting as a visual guide to show you exactly where the current momentum stands. Understanding how these dots interact with the candlesticks is the absolute key to unlocking massive profits and minimizing your potential. Let us dive deeper into the core concept of the Parabolic SAR and see how it visually represents the ongoing market trend. The word parabolic refers to the curved mathematical shape these dots form as the market trend accelerates strongly in one. Meanwhile, SAR stands for stop and reverse, meaning the indicator tells you when to close your current position and flip your buy. When you first apply this indicator to your trading platform, you will immediately notice the dots aligning either above or below prices. This simple visual cue removes the emotional guesswork from trading, providing an objective, mathematical framework for your daily market. Now, let us focus specifically on how to accurately identify a strong bullish trend using the placement of these parabolic SA. When the market is moving upwards, you will clearly see the indicator dots forming a supportive curve right below the green candlesticks. These dots act like a dynamic floor, constantly pushing the price higher and confirming that the buyers are in absolute complete control. As the bullish momentum increases, the distance between the dots might widen, showing that the upward trend is gaining significant market. Traders often use this specific signal to hold their long positions confidently, riding the massive upward wave until the momentum. It is crucial to remember that as long as the dots remain below the price, the overall bullish sentiment remains completely intact. You should actively ignore minor pullbacks if those indicator dots have not flipped, staying focused on the larger upward market price trajectory. Many successful investors build their entire portfolio strategy around this simple yet highly effective bullish confirmation tool. The visual clarity of these dots below the candles gives beginners the ultimate confidence to participate in long-term stock market rallies. Always ensure you are checking multiple time frames to confirm that the bullish trend is truly dominant before executing your final buy orders. Conversely, understanding how to spot a bearish market is equally vital for protecting your capital during sudden and unexpected. When the market sentiment turns negative, the parabolic SAR dots will immediately shift their position to appear directly above the red. This overhead placement acts like a heavy ceiling, continuously pressing down on the asset price and indicating strong selling pressure. Seeing these dots above the price is your definitive warning sign that the previous upward momentum has officially ended for the moment. Smart traders use this precise bearish signal to aggressively short the market, profiting immensely as the asset value drops lower. And as the downward trend accelerates rapidly, the dots will follow the falling price, creating a steep parabolic curve pointing toward. You must remain extremely patient and let the indicator guide you, avoiding the dangerous temptation to catch a falling knife too early. The beauty of this system is its sheer simplicity, allowing you to instantly recognize bearish dominance without relying on complex. Institutional traders heavily monitor these bearish dot formations to strategically offload their massive positions before the retail. By aligning your trades with the downward dots, you effectively swim with the current, drastically increasing your overall chances. Now we move to the most exciting part of our lesson, which is finding the exact reversal points to enter trades early. The magic happens right at the moment when the parabolic SAR dots suddenly flip their position from one side to the other. Imagine the dots are below the price, indicating a bullish trend, but then a strong red candle closes below the last dot. Instantly, the next dot will appear above the new candle, signaling a powerful trend reversal and a prime opportunity to sell immediately. This precise flipping mechanism is the core trading tactic that allows professionals to catch massive market swings right from their very beginning. Conversely, if the dots are above the price and a green candle breaks through, the dots flip below, signaling a buy entry. Catching these flips early gives you an incredible risk-to-reward ratio, maximizing your potential profits while keeping your initial risk minimal. However, you must wait for the current candlestick to fully close before confirming the dot flip to avoid dangerous false market signals. Many amateur traders lose money by jumping in too early, only to see the dot revert back before the trading session ends. Discipline is your best friend here. Always wait for the absolute confirmation of the flip before committing your hard-earned trading capital. To further increase your win rate, consider combining this dot flip strategy with other indicators like the Relative Strength Index, or MACD. When multiple technical tools point toward the same reversal, your confidence in executing that specific trade should be absolute. Let us look at a real chart example where the dots flipped, leading to a massive 500 pip move in Forex. The trader who spotted this early flip managed to secure a life-changing profit simply by following the objective rules we discussed. This proves that mastering the reversal points of the Parabolic SAR can truly elevate your trading career to entirely new professional levels. Beyond just finding entries, this indicator is arguably the greatest tool ever invented for effectively managing your risk through dynamic stop losses. Setting a static stop loss often leads to getting stopped out prematurely or giving back too much profit when the market turns. The Parabolic SAR solves this massive problem by providing a built-in trailing stop loss that moves automatically. When you enter a long trade, you simply place your initial stop loss exactly at the level of the very first dot. As the price moves up and new dots form higher, you manually adjust your stop loss to match the newest dot level. This brilliant trailing method guarantees that you lock in profits continuously, while still giving the asset enough breathing room to trend higher. If the market suddenly crashes, your trailing stop at the latest dot will trigger, saving you from a devastating financial account wipeout. For short positions, the logic remains exactly the same. You trail your stop loss downwards along the dots forming above the candle. By strictly following these dots for your exits, you completely eliminate the toxic emotions of greed and fear from your trading psychology. You no longer have to guess when to take profits. The indicator mathematically calculates the optimal exit point for your current trade. Professional hedge funds utilize similar trailing stop algorithms to manage billions of dollars, and now you have the exact same power. Remember, capital preservation is the absolute most important rule in trading, and the Parabolic SAR is your ultimate shield. Always respect the stop-loss level dictated by the dots, and never move it backwards hoping the market will magically recover soon. Now, we must address a crucial warning about this indicator, a vital limitation that every single trader must thoroughly understand. The Parabolic SAR is a trend-following tool, meaning it performs exceptionally well only when the market is moving in clear. However, when the market enters a sideways or ranging phase, this indicator becomes your absolute worst enemy, producing countless. During these choppy periods, the dots will rapidly flip back and forth above and below the price, creating extreme confusion, and this phenomenon is known as a whipsaw, and it can rapidly drain your trading account if you blindly follow every single flip. To avoid this deadly trap, you must first determine if the market is actually trending before relying on the Parabolic SAR signal. You can easily identify sideways markets by looking for flat price action, shrinking candlestick bodies, and a general lack of. Using an additional tool like the average directional index can perfectly help you filter out these dangerous, non-trending sideways. If the trend strength is exceptionally weak, simply ignore the Parabolic SAR dots entirely and wait patiently for a clear break. Recognizing when not to trade is often much more profitable than forcing trades in a terrible, unpredictable, and highly choppy. The most successful traders know exactly when to sit on their hands and protect their capital until the perfect trending conditions return. By combining patience with the power of the Parabolic SAR, you create an unbeatable, highly profitable, and incredibly consistent. We have completely covered the concepts, trend identification, reversal strategies, trailing stop losses, and practice applying these dots on your demo account first, ensuring you fully grasp the mechanics before risking your real, hard-earned money. Thank you so much for joining us today on this deep dive into mastering the incredibly powerful Parabolic SAR technical trading indicator. If you found this lesson highly valuable, please hit that subscribe button to never miss our future advanced financial trading strategy guides. This is Smart Tech and Finance US, wishing you highly successful trades, massive profits, and a wonderful journey in the finance.